Much for that, Sarah, and welcome to everyone. And we're going to be talking about the changes announced at the budget in the 2016 budget. So it's the budget, which is now almost a couple of weeks old now. And in particular, there are a number of changes announced in relation to individual tax returns and small business. So that's the first thing we're going to be talking about in the next half an hour. And then after that, we're also going through the update to the changes to superannuation. So as always, we wish there weren't this many changes, but as taxpayers and as our clients of WSC Group, we wanted you to be aware of the types of changes that are being proposed. Now, please note that these changes haven't actually been legislated yet, because we've just had the budget, we're having an election, so who knows if there will be some adjustments to the proposals made, but we can only go on with what we've got at the moment, the information we have at the moment. So that's what we're going through today. Remember, just a general advice warning that you know, the information we're going to talk about is of a general nature, and you should always make sure that if there's a specific question that you should talk to either your client manager for the accounting side of the business or our financial planning staff as well. So it's really important, you know, if you've got a specific question, that you book in the time, and you can actually do that by sending an email specifically to our financial planning or our client managers, or you can also send queries to info@wscgroup.com.au, and we'll definitely make contact with you. All right, I'm starting the presentation, and you can see the first slide I'm going to is looking at individual tax rates, and there has been a change announced for those individual tax rates. It's from the 1st of July 2016, and this is really important with all these budget updates. They all tend to be at slightly different dates, so you've got to pay attention to the change and to the actual date. So from the 1st of July 2016, the average, the 32% tax rate is actually going to, the threshold is going to increase from $80,000 to $87,000. Currently between $37,000 and $80,000, the marginal tax rate is 32.5% plus the 2% Medicare levy, and that's going to change from 37 to the threshold being 87,000. So positive for those earning that extra 7,000. For our property investor clients, you should note that you will get slightly less deductions, about 4.5% to be precise, where the crossover of your taxable income after your investment property losses changes between about 90 and 80,000, so from the 87,000 to the $80,000 threshold. So slightly less tax benefits in that range. Certainly if you haven't got properties, then there would certainly be a small tax benefits. The government's announced that to try to stop what they call bracket creep. And you can see in the next slide, I've actually done tax summaries of the cost of a typical $550,000 property. And this will mean that if you have a look at your columns, your first set of columns is your cash loss, and that's before any tax benefits. At a 5% interest rate, your property would probably cost you about $150 a week to hold. And you can see there between 37 and 87,000, which is the after-tax rate at 34.5%, remembering that's 32.5% plus the 2% Medicare levy. Tax benefits will pay for most of that property still, and that probably would cost you $25 a week after tax. Even better, between 87,000 and 180,000, you can see there about $9 a week after tax, and then the top marginal rate, we've put 49% there, and that's $28 positive. So you can see that in that particular property, if you're on the top marginal rate, your actual tax benefits pay for the entire cost of the property. That's assuming only this year, because the government has announced that the budget repair levy will actually be taken off, and that tax rate will go back to 47%. Let's see if that actually happens, but that's what the government's announced. Now, I'm going to the next slide there, and you can see the Medicare levy low-income thresholds. Always there's little hidden things in the details on these budgets, and you can see the threshold where someone doesn't have to pay Medicare levy has actually gone up slightly for individuals, very small, only about $500. For families, however, this threshold is actually increased by about $10,000 and is also going to be further increased for each dependent child and student. So you should just be aware of that and in advising our clients. Pensioners, you can see there the Medicare levy low-income thresholds gone up a little bit, but still at about $33,000. Now I'm going to the next slide there, our Medicare levy surcharge. And you should be aware with the Medicare levy surcharge, often clients have difficulties in this area because they don't have health insurance, their income goes above a certain amount, and they're starting to pay the Medicare levy surcharge, which is an additional tax on high income earners that don't have the health funds. So you can see your tier 1, if you're under 90,000 as a single or a family under 180,000, there's no problems at all. It's just when you get into the higher tiers, you can see there, you're single from 90 to 105,000 and family 180 to 210,000. Medicare levy surcharge is about 1%. Your second tier between 105 and 140,000 or 210 to 280,000 is about 1.25%, and your tier 3, 140,000 or more or 280,000 for a family, it's the full 1.5% Medicare levy surcharge. You can see that has been paused, the indexation, so there will be clients that because of income bracket creep will actually move into the next tier, so be aware of that when you're advising your clients. Also on the next slide you can see there your PHI rebate threshold, and that's actually your health insurance rebate. Excuse me, the surcharge will be extended for a further 3 years, and those thresholds are exactly the same as a Medicare levy surcharge threshold. So at these thresholds, not only if you don't have health insurance you'll have to pay an extra tax, but you start to, even if you have health insurance, you actually start to receive less of a rebate. We actually advise most of our clients not to claim this rebate during the year, because if they go over the threshold they'll have to pay some of it back. You can see the base tier, again, singles below 90,000, families below 180,000, you've got a 27.82 rebate. And you can see there as the tiers go up, that rebate progressively decreases to 18% to 9% and to 0 once you have over $140,000 income or $280,000 as a family. You should note, you can see there on the slide that there is a slightly different rebate for if you're under 65,000 or over 65,000. Right, so that's important just to note there. So under 65,000, and there's a slight change in the rate between March and June for the given year. But for all intensive purposes, you can see the rates there, starting from a 27% rebate, going down to 0, depending on what tier you're on. But if it's between April and June 16, you can see that the rebate actually decreases less, and that's probably another reason to actually make sure that you don't claim your rebate until you actually put your tax return in. Now I'm going to the next slide, other announcements. The Treasurer has announced, as I previously said, that the budget repair levy on individuals earning more than 180,000 will not be extended beyond the 3-year term, and will cease at the end of 2016-2017 year. And the government has confirmed it won't proceed with the deregulation of university fees. So some of our clients will no doubt be happy about that. Now, I'm also getting onto our business tax rates, And you can see there, and it was a big announcement in the budget, that the government has announced that they're going to reduce the company tax rate to 25% over 10 years. You can see that by the 1st of July 2026. From the 16-17 year, so from the 1st of July 2016, the company tax rate for business with an aggregated turnover of less than 10 million is actually going to be reduced down to 27.5% and down from 28.5%. And before June 2016, you actually could only qualify for the reduced tax rate if you turn under $2 million. So this is really, really good news for small business, and it certainly puts 95% of our clients in a position where they can get obviously a lower tax rate and more concessions in terms of deductions, and I'll talk about that in the coming slides. See at the bottom of this slide, it also talks about the maximum franking credit rate, and without getting too technical about that, in your tax returns, the company tax returns, if you have a company, we will actually be adjusting your franking account, and your franking account will actually be adjusted to reflect the fact that future franking credits will only be at 27.5%. Therefore, this is what normally happens in this situation when there's a change in company tax rate, because you have previously paid company tax at 30%, so your franking account actually is then made to reflect this, so there's some more franking credits but at a less rate. So that will only apply for tax returns in the 2016-17 year. Now I'm going to the next slide there, and the slide it's termed discounts, and this is for clients that have small businesses that don't actually have companies. And at the moment there's going to be, from the 1st of July 2016, that current 5% discount for small businesses, and this was to give these unincorporated businesses an additional tax break if they weren't companies. The discount's been increased from 5% to 8%. So that's really good news. The turnover test has actually changed from 2 million to 5 million. Why it hasn't changed to 10 million, I have no idea, but that's what the threshold is now. And that benefit, you can see there's a cap of $1,000 per individual, and that will be retained. So look, there's small benefits, but everything helps, certainly if you're an unincorporated taxpayer. Now I'm also just going to the next page, and we won't spend a lot of time on this, but we do have some clients who actually have claimed the wine equalisation rebate cap and wine equalisation rebate, and the cap's actually changing, so it's reducing from 500 to 350,000, and then in 2018 going down to 290,000. And in addition, there's some new integrity measures that are going to be reduced, and this basically is designed to tighten the access. And you can see there a wine producer must own a winery or have a long-term lease over the winery and sell a packaged brand, or you know, really add value to wine domestically. So look, won't be applicable for a lot of our clients, but we thought we'd just mention that. Now let's get into a little bit more detail on the small business thresholds. We've actually got a whole slide on this, and you can see there, 1st of July 2016, the small business entity turnover threshold, we've already mentioned, will increase from 2 million to 10 million. So this is only about 6 weeks away. Now, who knows if it would change, but the Labor government, I believe, has indicated that they would support this particular change. They don't like some of the other changes with the cheaper, lower tax rates for larger companies, but up to 10 million, I believe this will certainly come through. And with the 2 million changing to 10 million, it allows about an additional 90 to 100,000 businesses to gain a lower tax rate, right, which is changing from the 1st of July 2016 to 27.5%, and it also allows some of the depreciation rules. Now, this will mean that for businesses turning over, say, $5 million, they'll be able to put their all their assets into a pool and depreciate those assets at actually a more favourable rate than they're probably getting. And also you can see the simplified business depreciation rules. They'll be able to claim an immediate deduction for assets costing less than $20,000. So this is really positive because this $20,000 immediate asset write-off was only available for businesses which are under $2 million turnover. So really, really good news. That $20,000 has only been earmarked to be available to the 30th of June 2017 anyway. A couple of other things too, you can see there's simplified trading stock rules, and that will apply if the value of the stock is less than $5,000, you can just write it off. And also really positive is if, because when clients have been approaching $2 million in turnover for their business, they would have normally had to convert to accruals. Now that threshold is going to be $10 million. So until you get to $10 million, you'll be able to account for the GST on a cash basis rather than on an accrual basis. And also there's immediate deductibility for various startup costs such as professional fees and government charges, and also more generous FBT exemptions for laptop, portable electronic devices, laptops and tablets. So that's always very important. And remember, if you need to talk specifically about your situation, speak to one of our client managers. You may want to put off expenditure on, say, a $15,000 forklift until the 1st of July or early July 2016 because you're going to get a better deduction. So we're certainly talking about this with all our clients as a part of their tax planning in the coming May and June periods. Also on the next slide you can see their GST. This is going to be extended to low value goods which are imported. You can see there's been an exemption previously of up to $1,000. Now that's going to actually change, and overseas suppliers that have a turnover of more than $75,000 are now going to be have to be registered, and they'll remit the GST. Okay, we've still got to get approval from the states and territories because it's a GST change. Let's see how we go with that, but I'm sure that probably will come through. We're coming towards the end of this presentation, the economic overview, and you can see there the deficit, the underlying deficit forecast to be about $37 billion. This is a horrible, horrible result, and we should keep that in mind as taxpayers. We want to have governments reduce these terrible results. Wage growth, you can see there is predicting to grow, and I'm not so sure if that's going to happen, but this is what the budget economic overview is predicted. And business investment, you can see that is actually shrinking over the next 2 years. So obviously the government's trying not to take too much stimulus out of the economy with the end of the mining boom. You can see the strength of our trading partners. China forecast to grow at 6.5%, India forecast to grow at 7.5%, US at 2.5%, and Europe at 1.5%. So that's the assumptions we've made the budget. So let's hope those occur, otherwise we're going to have larger budget deficits going into the future. Just in conclusion, some of those things that we've spoken about you might need a little bit more clarification on. Certainly always feel free to drop in an email, as I've previously said, to info@wscgroup.com.au. Also, you can speak with your client manager, and always I'm available to be able to assist you in whatever ways I can. So that's really the update for the changes to individuals and small business. I hope that's been helpful today, and we're not going to have questions because there's probably a lot of questions you might have. Please address those, as I've said, to info@wscgroup.com.au, your client manager, myself, and we'll be able to assist you with your planning. If you're a business and you're listening to this, make sure you do have a tax planning session with us coming up because the 30th of June is approaching rapidly. All right, well, thanks very much, and I'll look forward to touching base with you in the coming weeks and months.